Good afternoon, everyone. Welcome to this episode of Trading Success. Now, what a day it was yesterday. Monday, the biggest question was, what the hell just happened? We have never seen, I don't think I've seen volatility like that in the Asian markets for a very, very long time. And I don't think we've seen PVI like that. It was enormous. So it was very high risk trading yesterday, very challenging conditions. And we almost went limit down, which means, well, limit down is when they actually close the exchange. Now, if the market limits down, if the price decreases by 5% within the overnight hours, which is basically the Asian market, our time, if it goes less than 5% than the prior closing day, we go into what's called a limit down, where they close the exchange. Now, we went beyond limit down yesterday on the Nasdaq, at least. I'm not too sure about the S&P 500, but the Nasdaq did. And we were expecting the exchange to be closed. And we put some warnings out on our Facebook page about that, because you don't want to be caught in a limit down situation unless you're on the short side, unless you're in a trade short. If you're long and your stop is below the limit down price, that stop loss can get gapped. So it's a very dangerous scenario. So we're warning people to be very cautious of that, because we thought we could go limit down at any moment. But for some reason, it did not go limit down. And the US market actually did a rally, and it did what was called a short covering rally. And it pretty much took a lot of stop losses. I think a lot of short traders that were short yesterday, momentum-based traders, I think would have got caught on the wrong side yesterday, trying to short the market, or holding on to shorts and expecting the market to fall even more. And probably would have been caught up in the stop, what we call a short covering rally, where those buy orders create more buy orders, creates a demand issue where there's lack of sellers, more buyers, and prices appreciate. And we saw that on European Open, and we saw that again on the US Open. So it was crazy yesterday. It was, for the new traders in the markets, it was definitely not a day. It was a great learning day, not a great day for trading, just because of the risk was so high. But if you knew what you're doing, it could have been very lucrative. But even a lot of our experienced traders were saying that volatility was just too high. We were seeing PVI numbers of over 450 to 500 in the US cash market. I think 300 in the Euro session. 200 to 300 in the Asia session. It was bonkers. So, it's the volatility has definitely picked up yesterday. And the big question was people asking why, what stirred it, what created all of this price action. Well, what happened? A lot of it happens from what happened last week. It took a little while for the market to react to the news, but what happened last week was, one of the big things was on Wednesday morning, I believe. Wednesday morning or Wednesday during the day, Bank of Japan increased their interest rates. Now, why would increasing interest rates be an issue for the stock market? Well, a couple of reasons. One of the main reasons is a lot of big investors borrow money from Japan at virtually 0 to 0.1% interest, borrow that money, and then invest that money in real estate and stock market. A lot of stock markets, whether it's the Japan stock market, Australia, US stock market. But a lot of that borrowed money, leveraged money, goes into markets, right? So when the rates went up, what it did, it stimulated a lot of selling, so that these loans or these increased interest rates could be paid off. So that was one of the main culprits or catalysts for the drop in the indexes. Was the Nikkei dropped 13%, I believe, on Monday, which was an enormous drop, and the stock markets or the futures dropped at least 5%, but did recover, and that's the key word. They did recover pretty much almost within one day. So it was a bit of a flash crash, and we've seen no follow through today, at least, and the market's still holding itself. What else happened was last week, core CPI came out. Inflation numbers were slightly higher. And we had FOMC last week as well. And Jerome Powell, the Federal Reserve Chairman of the Federal Open Market Committee, so basically the central bank of the United States, said that it looked like if indicators remained, they were tracking the way they have been tracking, they looked like they were going to potentially announce a rate cut in September. They didn't announce the rate cut in August, but they announced it potentially in the next meeting, which will be middle of September sometime, so about 45 days from the 1st of August. So that's the market like that initially. Then employment figures came out on Friday, non-farm payroll came out, and those numbers were poor, right? So job creation was a lot lower than what had been expected. So, it was a combination of things: higher inflation, lack of increasing of jobs. It all stunk of what was happening. Stagflation is the term that's being used, where inflation is increasing and unemployment is increasing, and it just doesn't make sense, right? You think if inflation was increasing, you think there would be increase in jobs, right? Because there would be more spending and those sorts of things. So there's a little bit of a disconnect in the economy. So a stagflation is the term they call for that, when you get increasing rates, increasing CPI, increase inflation, and then you get increased unemployment, but no job creation. So it means the economy is a little bit flat, even though prices are going up, which really, like I said, doesn't make sense, right? So that has sent the market spinning. So let's go and have a look at the charts to see what exactly happened last week, how the balance rules played out beautifully, and then what's happened yesterday, Monday, and what's happening today, being Tuesday. Before we do that, just in terms of earnings, so last week there was a few companies made announcements. So we had a couple of big giants came out last week. Microsoft was a fairly disappointing report. Still profitable, but not the earnings they'd expected. I'm not too sure about all the others, but I don't think there was anything too significant out there. This week we don't have as much in terms of any of the big tech companies that we know of, apart from Uber and Airbnb coming out. Shopify are out. Walt Disney's out. Occidental Petroleum coming out. And there's Supermicro Computers. So the Caterpillar. So there's a few announcements to come out this week. But in terms of other news, very light on in that regards. In terms of financial news, so last night we had ISM services PMI come out, and that was higher than expected, which is very good. Holding above 50, that's a good sign. And then we've got our usual unemployment claims on Thursday, which is a weekly announcement. So let's now look at the charts and see what happened last week. Let's review that and then see what's happening this week so far. All right, so let's have a look at Nasdaq daily chart. So as you can see here, we've got the balance zone from last week. Now, what we were talking about was we wanted to see a test of the high and look for continuation. Once we broke out of the high, look for continuation above. Or if the high fails, look for a test of the low. And then if that breaks, then look for continuation below. So what happened? So we had earlier in the week, the market tested the high, failed, went back, tested the low, that failed. Then we broke out of the high on Wednesday here. That was after the FOMC announcement. Then on Thursday, we came back in. All right, so we came back into the prior balance and we tested the low. Amazing how these price references are so powerful. That day there created the balance, and it's quite amazing how powerful it is as a level. Then the market came back in, and then Friday we sold off, and we went down and we tested these little imbalance zones here, which hadn't been quite filled out yet. Now, this was Monday. So Monday was massive. That's one of the biggest days I've seen in my time, and the reason why it's so big, like it's almost bigger than what we experienced during the COVID, and then it's way bigger than what we experienced during Brexit. But that's a 4,000 tick range yesterday. That's one of the biggest falls we've seen in one day. So if we look at the regular trading hours, all right, this is the US cash market. You can see we gapped down on Friday here. So you can see we've got a gap here on Friday. And then we've also got a gap from between Friday's low and Monday's high. So this is the regular trading hour. So this is the US cash market trading right now. So we never filled the gap, and there's still a gap to the upside to fill as well. Interesting to note, if I go back to that other slide, see how we've actually filled out these two gaps here that we thought if things got bearish, if this imbalance, this balance zone failed to the high side and we never saw a rally to the high side, and if we did get any negative news, which we did seem to get, the market reacted very negatively to the news recently. Look what the market has done, and we're in this correctional mode at the moment. But interesting to note, this is where we're trading today, and we've already tested the high, and we're starting to fill the gap already in the Asian session. So be interesting if Europe or the US can go and fill the gap, which is that space there. So between 18,376 roughly and 18,289. So there's a fair wad of ticks to be had if we can get a nice trade through that break there. So that's the Nasdaq, and very, very interesting. Let's have a look at S&P 500. Very similar story. So this is the 24-hour data, so it includes the overnight trading, which is Asia, Europe, and then the regular trading hours, which is the US cash market. Very similar balance rules played out last week. These markets are very correlated. The indexes are working very close together, the Nasdaq and the S&P. So yes, S&P did the same thing. Wednesday tried to break out, Thursday, we sucked back in to balance. Friday, we opened in balance, and then we traded out of balance, and we broke out of balance. And if you notice, when the market, like on this day on Wednesday, when the market broke out of balance, it broke out of balance during the US cash market. When it broke out, it actually came back to that high, that price there, twice throughout the day, or during the US cash market hours, and continued trading higher. So it was interesting how that high, which was a resistance, acted as a support when the market broke out. So this is how you can use those key price levels as a great decision point to look for trades. Particularly, this particular trade was a long trade. So very similar story. We've cleaned out these imbalance zones down here. There's really no imbalance on this run, which has happened from April. Notice also on the monthly charts, we've broken the July low, and we've broken the June low, and we're very close to breaking the May low as well. Nasdaq has actually, if we look at the Nasdaq monthly, which I'll bring up the Nasdaq monthly here, you can see Nasdaq has broken the July, June, and May, and it's tested the April low here. So Nasdaq's a little bit more bearish than the S&P 500 at the moment. So you can see where we are. That this market is still. If we look at the state of the market, this market is going into what we call an expanding range, because we've broken the prior higher low there. So we've gone from a higher high, and we've just broke that low slightly. So that is a new lower low. So when we have a higher high and a lower low, this market is in the expanding range. So are we going to see this market continue to expand downwards, or are we going to see this expand to the high side and go back and trade within this range? So that's important levels to watch. All right, what other charts are important to look at? Let's just have a look. If I go back to the Nasdaq, this chart here, you can see where we are now. So you can see there's this is the 24-hour data. All right, so you can see where we've come down to. We've come down to this large MDI here, the large trend indicator right here. We broke the medium one, and this is still going up. This because we've been in such a large uptrend, but it's definitely flattening out. This market, in terms of range, or in terms of state, is still very bearish. So we're basically just gone from higher highs to higher lows, all the way down. We made a lower high here, we made a lower low here, and then we made lower highs here. So this market is still swinging down. Interesting to note, if you run a fib over this here, you can see we're almost back to the 50 of that range. All right, so I think we probably should see a test of the 50. I think in the next, probably tonight or tomorrow, we should see this market head back up to 18,530. See a test of the 50%. See if the market, generally if the market gets up to these major 50s, it can act as a magnet, but the market can also stall there for quite some time. So I'll be watching that level there. But this is definitely what we saw. If we look at the smaller time frames, we look at the 30-minute time frame. So you can see this was the big sell-off yesterday. Big sell-off in the Asian market. Then we came into the European Open. The market rallied. It rallied right back up to the middle of the day, all right, or middle of the move. Then we had another attempt to the downside, and it did not go limit down. The exchange did not close. The market opened here, and you can see this market rallied to the upside. And you can see we rallied probably up to about 90% of yesterday's range, or at least up to the 76 of the swing. If we run a fib over the last swing, you can see where we went up to. We went up to the 76 roughly of that swing down, and that's where the market turned from. So this is a very strong rally in the US cash market. So there was, this market was basically, this 30-minute chart was basically one time framing to the high side, and then the US close, it went into a little bit of consolidation into the close, but we finished. The US market opened here, so you can see this is where the cash market opened, right down here. That was the opening candle. We never came back and tested the lows at all. We just rallied. So a lot of these shorts here had to cover themselves. All right, so, and you can see it looks like the buyers are coming back in today as well and trying to fill that gap. All right, fill the gap from over the weekend. And we've already traded inside the gap today, and looks like it'll probably try and fill it tonight. But it'll be interesting if they can't fill this gap, then that's a sign that the sellers are still wanting to have a test of these lows. But if we fill the gap, then this market will be back into some level of balance, because at the moment it's quite imbalanced. You can see we've had a lot of imbalanced areas yesterday that were filled. But there's still this little bit of imbalance here that hasn't been filled yet. Okay. Now, another big story yesterday was Bitcoin. Let's have a look at Bitcoin and see what we got here. Now, Bitcoin was a real surprise packet. This is the daily chart on Bitcoin. So what we had seen I think at the end of last week or the week before, we'd seen this massive rally from down here around 54, and this market pretty much looking very bullish. We're going to an expanding range and very bullish. You can see we went 1, 2, 3 legs up. Now, this trend line to the upside has been Bitcoin's nemesis. The market has struggled to find support above that trend line. And then what happened last week? Well, the market just fell off. All right. Now, that was Friday, so we just rallied down. So we had 1, 2, 3, 4, 5 down days. Now, this was the gap down on the weekend. All right, so this was Monday, and this is where we're trading right now, probably around about 55,000, up close to 56,000. So we went down as low as 49,000 yesterday. Now, that is a huge drop. There was word of billions of dollars liquidated in Bitcoin yesterday from leveraged longs. So people trading the futures or some type of leveraged Bitcoin instrument or cryptocurrencies in general would have absolutely got hammered yesterday if you had fairly high leverage, high risk, and tight stops. You would have been absolutely belted. So this market is struggling to rally. It keeps getting to these trend lines, the upside, and failing. Now, notice how we have found support once again. The market has managed to close just very close to this trend line. Let's have a look. I just need to expand this out. You can see how we've closed just inside this trend channel, and maybe this is obviously the best time to be buying, because it seems to, every time it comes down here, the buyers, if you've bought off this trend line, you would have done extremely well. So this trend line seems to be acting as a support level in the market. So that could be an opportunity for you this week. Let's have a look at oil. Oil also has been belted as well. we had these imbalance zones have been filled in. So there was one there, another one down here. So they've all been filled in last week, and we've seen a little bit of a recovery today in oil, and we've got a nice little doji bar here. So we've got a reversal trigger on the daily chart up around 74.50, 74.40, around that mark there. So it'll be interesting to see if oil can rally from here. You can see where we're, this larger range here, the market is finding support off that 61.8, and we're very close to this 50% of that major range. Gold, you think with all this negativity and fear would have rallied to the high side, but that really didn't do much either yesterday. Gold was fairly insipid yesterday. A big trading range though, very volatile. That's one of the biggest trading ranges you'll see on gold, but really non-committal in its direction. So you think with all the fear around, you thought gold might have spiked high, but not yet. So you can see it's trading within a range at the moment. So we've got this expanding range. So you've got a lower low, higher high here, and the market has come down and it's swung down. But are we going to swing back up from here, or are we going to expand the range? So if we tighten up this fib to be a bit more relevant, you can see where we are. You can see the fibs market struggling to close above the 23 and the 76 here. If we look at a little bit more of a zoomed in shot of that range, you can see here the market is struggling to close below the 76, and looks like it's feeling quite balanced in the middle of this range. So we could be going into a contracting range on this, but at the moment it is an expanding range technically. So are we going to continue expanding to the downside? Are we going to break out to the upside? And if we do break out to the upside, the market will continue its bullish uptrend. You can see it's still grinding in an uptrend, but when we start to see it stair-stepping, then we know we're in a trend. So we're looking for higher highs and higher lows for that. So thank you for joining, thank you for listening, and hopefully you got some great insights out of what's been happening in these markets. Remember, I think the biggest point of all of these things when you're trading is to be very mindful of the volatility. All right, don't over-risk yourself. But the biggest thing also is don't get caught up in biases around hype, around what should happen or what could happen. Remember, when markets are volatile, that means prices can move down and can move up. All right, so volatility can be powerful in the downwards direction, but like we saw last night in the US cash market and the European Open, it can also be volatile to the upside as well. So just be very careful of your biases. Don't get caught thinking the market's got to do something. All right, remember, the market will do what it's going to do. We just need to try to predict what the market's going to do in the next half an hour, 60 minutes, hour, 2 hours, whatever time frame we're trading. That's all that is really relevant for us. So watch you don't get caught up in your biases. Have a flexible mind when you're trading. All right. Thanks for joining, guys. Hope you got lots of great insight out of that. And be careful, be safe, and we'll see you next week. Bye for now.